Hope you're doing fantastic. As we continue to help our partners and really our clients navigate this new movement in NAR, just a quick update. Last Saturday was the specific movement of all the changes in the industry that's been talked about, and we're seeing some of the impact. It's like anything. Sometimes it sounds a lot worse than what it is, but it is here. It's serious, and it has some challenges for certainly real estate agents and continue to work on their value proposition, and also clients learning how to see the value in representation, and does it make sense, and how do I pay for that if price points are high, and if interest rates are high, how do we go help that? So for us, it's continue to help serve our clients and our partners in this market. We want to make sure that we have solutions that are tangible, that we have solutions that can help people navigate and really make the best decision for their family in light of what is transpired. So if you look at my screen here, this is a total cost analysis that we've created to show a client of ours who is navigating the challenges. What does this look like? So we want to show options. So this is something we can show over and over again. So if you're an agent, hey, check this out for a minute. If you're a client who's thinking about buying in the next few months or next 6 months or where that may be, check this out. So what this is 4 options to show you that how compensation can be covered for the buyer's agent. So the first column here is your traditional way, right? It's been the way it's always been, where the seller pays for the buyer's agent compensation. And again, remember, buyer's agents are doing all that initial work to get the client, help pre-approve their financial partner, do a buyer's consultation, walk them through all that, find all those things. And like anything in life, some are better than others, right? But those who are fantastic at it, they're helping prepare their client for the questions, the legal protection, and then they're getting them into the home and doing all the details. As I say often, you don't pay an agent to show you a home. Anybody can open a door, so to speak, but negotiation, understanding the market, being able to advocate, those are significant things. So, the seller is paying that buyer's agent essentially a compensation in this column 1 for bringing them a buyer to sell their home, okay? Column 2 is where we increase the purchase price to help with the buyer does not maybe have, in that case, the money to come out for compensation, and the seller's unwilling to pay. So what we do in this option is the property, of course, has to appraise, but we just increase that purchase price for the compensation difference. And there's other strategies we can deploy if needed, but in this case, we would raise the purchase price to $515. Seller or buyer still putting down the same amount of money, and they're basically financing that compensation into the loan. You can see the difference is it's about $55 difference for the month. That's important to know that the buyer is increasing their monthly payment to finance that, but that's one way to avoid any challenges of having to come out of pocket. The third option is where essentially you finance it into the loan. So the option we just talked about is where we're raising the purchase price. Another option is where we actually just finance the loan. So in this case, this client was looking to put down 10%. What we essentially would do is lower that to 7%, use that other 3% that the buyer had to pay the buyer's agent's compensation. Now, what are a couple of things you got to be mindful of that? Well, payment's going to increase a little bit. In this case, it goes up $140 a month because your mortgage insurance gets adjusted, and so does obviously the amount of money you're putting down. So again, if it becomes about not having representation versus having representation, this is another way to navigate that. And then lastly, maybe you don't want to have anything to do with the loan process. You don't want to put money down. You don't want to increase the purchase price. Maybe there's other things that keep us from that. And then the last option, you're just bringing in cash the difference for your buyer's agent compensation. So listen, hey, as we help agents and clients navigate this market, having a financial partner, both for you as an agent, has never been more crucial to have strategies and plans in place that help you get paid as you continue to earn your value. And then for you as a client, as you're navigating this market and all the changes, listen, having a mortgage advisor, a financial partner that advocates for you is much better than having a rate sheet or something online. I employ you to use a local professional, somebody that has trusted, look at their reviews, look at how they do their course of business, and look for what the agent is referring. Agents' lifeline is in their financial partner. They're not referring somebody that's not going to make sure that their family gets compensated and their family's reputation changes in any way. So keep those things in mind. Those are vital parts of the process. If we can help in any way, we would love the opportunity. Thanks for checking us out. Josh Redeem, the Dean Team. We'll see you.